and thank you for tuning into this update. I'm Joshua Dobi. Appreciate so much you taking a few minutes to sit with me here and to hear a little bit about our thoughts on this end of things. Not only about where we see things right now, but where we see things here over the next several months and even for the balance of the year. So to be respectful of your time, I'm going to dive right in and we'll get to it. As you probably heard this week, and that's really the reason for the timing of this particular update, Federal Reserve Board of Governors got together again and, as was largely anticipated, raised the overnight lending rate by 25 basis points or 1/4 of 1%. This continues the trend that they started back in March of last year of continuously raising rates, and actually before this rate hike, quite a bit more aggressively than what they have done here with this last one. Some were 50 basis points, some were 75 basis points at a time. But now they're starting to cool that down or back off a little bit because some of the data that they watch and what their intention is starting to react in ways that the Federal Reserve desires, specifically with regards to inflation. So as measured by the CPI, or Consumer Price Index, we peaked out over 9% there in the summer of last year, and we've come down now below 7%, or probably slightly north of 6% right now as of the time of this recording, again as measured by the CPI, or Consumer Price Index. So the trajectory is good. This is what the Federal Reserve desires. We probably are going to get another rate hike here in March as well, probably at least at this point, insofar as the futures market is indicating, probably about another 25 basis points of increase at that time. Not sure what the future ones are going to be after that, if any. At this point, we're still in a watch and see kind of mode to see what kind of indications the Federal Reserve may give to us here over the next days and weeks about what their intention is beyond next month's meeting. Little hard to tell at this point, although it did seem that the Federal Reserve Board of Governors Chairman, Jay Powell, yesterday indicated that they see the end in sight, but we're not there yet insofar as future rate hikes are concerned. The market obviously took to that very, very positively yesterday and even into the morning as of the time of this recording as well. But I wouldn't get too carried away with that, and I'll talk about that here in just a moment. So again, coming back to the inflation aspect of things, inflation definitely coming down, interest rates definitely a lot higher, and we're probably going to continue to see the effect of higher interest rates, especially with regards to the residential housing market, which we are already starting to see, as in some markets, pricing on the sell side is definitely starting to crest some. We would anticipate that because higher mortgage rates means that folks are either able to afford less or perhaps not going to be buying or moving altogether, and that's going to naturally cool the market. So we're going to continue to watch this. The markets have started in January, as measured by our most popular indices, in a pretty positive way. If you look at the Dow Jones Industrial Average, S&P 500 Index, NASDAQ Composite, certainly, it's been a pretty strong start to the year. 3, 4, 5, 6%, even higher, depending upon which index you're using to measure it. Pretty strong start, but I wouldn't want to get too carried away with that. We have to recover quite a bit from last year insofar as the indexes are concerned, because they had a pretty miserable end of last year, down between 9 and 33% insofar as the indexes are concerned. Not necessarily your portfolio, but the indexes last year down between 9 and 33% last year. So coming up 3, 4, 5, 6% encouraging, but obviously still a ways to go. However, we anticipate here that we're going to be in a little bit of what we're calling a washing machine kind of cycle. We're going to have some big ups, we're going to have some big downs, but we don't really see that we're going to be going either too much in a positive or a negative direction from where we are right now until the Federal Reserve is done raising rates. And like I said earlier in this update here, that could be several months from now. So we're continuing to watch that, continuing to understand what that means for the overall markets. The overall markets seem to indicate that as that's done, they do desire to move forward. That's not a hard and fast kind of rule, but certainly it seems from a performance standpoint in the short runs that the markets do desire to move forward. We're going to have to see what that means for the balance of the year. When do they stop raising rates? What does that mean in terms of pricing models for individual stocks and bonds? And then obviously what does that mean for your portfolio and overall performance of what we expect for this year. Our expectations continue to be quite modest in terms of overall performance for the balance of 2023. I hope we're ridiculously wrong on the positive side and that things just take off, but at this point we don't see that as the market gets readjusted to this higher interest rate environment. So we're going to continue to watch it. Obviously, we're going to continue to bring you updates as we see things, and certainly as new data or our thoughts change, we want you to be aware of those just as quickly as we have those items as well. But I wanted to bring you this brief update, and because I am always sensitive to your time, I'm going to wrap up for right now. You know, always, at any time, if you'd like to reach out to us and talk about your individual portfolio, the markets overall, if your favorite team or one of your favorite teams is going to be in the Super Bowl here in a couple of weeks, definitely want to hear about that and the ways in which you celebrate, if you do Super Bowl parties or anything along those lines. Weather-wise, many of you in many parts of the country right now, especially you folks on the West Coast and then in the Rockies and in the Midwest right now, are really experiencing winter. So we hope that this finds you safe and warm, and hopefully those extreme storms will be beyond you sooner rather than later. But again, friends, at any time, you know, reach out to us with your thoughts or questions. We always enjoy hearing from you. And until the next time, I'll look forward to seeing you soon.